Risk-based pricing is spoken a lot about in the market, and it's interesting because I think there's been a reluctance on a broad scale to do it to date for a number of reasons. One has been purely for commercial factors, but I think more predominantly also lack of technology at the point of sale and an inability to actually calculate risk-based pricing, and it is important to do it at the point of sale. With the question of what form will it take in the future, it's very interesting to also note it actually has been in the Australian market for some time, but it has been largely in the domain of the specialist lenders. So they are actually already providing rates based on customer type, but more predominantly based on number of defaults or missed payments in that specialist type of arena. In the mainstream prime part of the market, we do see risk-based pricing also up to date, but it's very, very limited, and limited really only to what is the LVR of the home loan and often what is the size of the home loan, which is more offering discounts for a larger size loan. So it's really just the LVR piece that's played a risk-based input to date. Technology is fundamental to it. One of the things that hampers a lot of lenders in the market, I think, is legacy-based processing and core banking systems. I think the other key thing, though, or probably the most critical part of the role that technology will play, is actually making risk-based pricing relevant at the point of sale. So it's before a lender even sees an application, they need to be able to provide a broker or a consumer directly as well a fairly accurate indication of what their price is going to be, and not determined just on a rate card or what their LVR is or what their loan size, but on a number of contributing factors. They may include what is the borrower type, what profession they're in, of course inputs from their own credit check, have they ever had any defaults or missed payments, but also factors such as how long have they been a customer of their current institution and what's the average life of loan likely to be for the incoming institution. Other important factors which will also help contribute to that may be, well, what's the borrower type? Is it an investor? Is it an owner-occupier? Is it cash out? Is it a first home buyer? So I think they're all very important contributing factors. Look, I think comprehensive credit reporting also spoken about a lot, and it will play an important role at a certain point in the future. When it will be in a position where it can play an important role is undetermined. I'm not sure when exactly that will be. But while it will play an important role, it will be one of a number of contributing factors that will be important in the future, I think, in risk-based pricing. And I think what's really important in the current world from a technology perspective is not only the ability to apply rules at the point of sale for a customer, but also to be able to talk to a number of external systems on a software platform. That may be doing an AVM to get an indication as to what's the real property value like for a refinance, for example, as opposed to a contract to sale, where the contract to sale should be really the purchase price. Other factors which we're seeing now is the ability to actually ID a customer electronically at the point of submission, to also do a credit check as part of the application process, not as part of the loan assessment process. And there's a lot of different providers in the market that can actually contribute very quickly in real time to a home loan application, and therefore provide very valuable inputs to a rule base to decide, well, what is the risk-based pricing output for that particular customer.